And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Well, good morning to my futures family. It's time for the market prep for Friday, March the 10th. My name is John Ogland. Thank you for trusting me with your time. And as always, we're going to try and find accurate context, good risk management, and remain patient in our trading today. So the unemployment numbers are finally out. So the unemployment rate rose to 3.6%. They were looking for it to remain at 3.4. So that came out a little bit higher. The market is liking that number. However, the non-farm payrolls, they were looking for 205,000. It came out 311,000. There was a revision to last month's huge number of 517. They dropped that by about 13,000. Private non-farm payrolls, they were looking for 210,000. They came out 265,000. A little bit of a rise in the participation rate, also 62.4 last month, 62.5% this month. What does it all mean? What is the market's going to do? I don't know. These days like this are days when I wish that I could have a crystal ball and to tell everybody what to do and where to do it, but nobody can do that, of course. We've got the February low now largely looming above us as far as price is concerned as risks pile up on investors, rates, employment, recession fears, and the president's budget yesterday, as well as the banking sector that got hit. And I see that Kevin's talking about the SVB news yesterday and how Kramer was pumping it up a couple of weeks ago. And he has a tendency to do that. I remember he told everybody to buy Bear Stearns right before it fell apart. So does this mean a new leg down for stocks? We're going to take a look at that on the charts here very shortly. Crude prices are set for possibly a 5% drop this week as economic worries pile up and might be hurting demand a little bit. Flight to quality assets did very well yesterday. Looks like we've got some upside movement, at least last I checked. We got gold treasuries enjoying some attention as the VIX has spiked up about 8%. It is currently right around 23. We got the dollar index tanking here after the numbers came out, 104.86 last I checked. And the yield on the 10-year lower, 3.78% last I checked. It's about 20 basis points lower than yesterday at this time. So it's definitely some markets moving. The dollar has tanked. That's going to be good for your gold. A lot of folks already asking if you killed it yesterday because you are our proverbial bear. Good morning, everyone. Jason Bartles, first in the room. You win the prize this morning. Good morning, Shaw. Shaw was asking if you, our resident bear, killed it yesterday. I hope you did. I didn't get a call, so I'm hoping things went well. What do we got here? Terry King, good morning. Timothy, good morning, my brother. Rick, love you. Stephen, good morning. Finally passed the combine this morning. Nice job, Stephen. Congratulations. We're looking forward to your continued success. Bill Phillips, Brian, Will. I don't know about anyone else, but yesterday I really missed the day's reflection. Oh, I'm sorry. But maybe you watched the question and answer section with Michael and Dan yesterday. Good morning, Andy Bleed. Good morning, Kevin. SVB, I guess, has now halted news. Yikes, would hate to be caught in that, whether long or short. How about it, right? John, happy Friday to you too. Haggle Matters, Urban Cowboy, good morning. Kramer was pumping up SVB just weeks ago, saying Wall Street had mistakenly been concerned about the bank's deposit base and heavy instrument concentration. Kramer knows how to pick them sometimes, huh? Well, I mean, that's really all of us. Good morning, Vince, Dr. VJ, Orion, Dowitzer, Tim, Shy T, Trading Research, Leslie, Biban, Anissa, David, Travis, good morning, Chris, Sarah Hall, prayers and love as always. Good day. Good morning in metals. Good job, Rick, Rob T, Sarah Hall. Happy Friday for sure. Nasdaq, Travis, Marcelo, Joe, good morning. Wuhan Tourism Bureau, just past step 2. Nice. We got some success. I love it when you guys tell me about that. It's always great to see. And again, Wuhan, we're looking forward to your continued success. Banks getting hammered. That SVB, what is that? The Silicon Valley Bank really putting a chill into things as far as the banking sector is concerned. What was it, down 60% yesterday and currently halted? Yikes. Rusty Golfer, good morning. Good morning, good morning. So this is Friday. An inverse Kramer's the best indicator ever created. JD. Phil, good morning. So it is Friday. No more events after the market prep here this morning. I've enjoyed an excellent week with all of you. Kevin is talking to you, Rick, talking about Bitcoin had broken important support around 21,650 or so last night, traded into the 19s, but has bounced back on the NFP number, back above 20. Lots of folks saying congratulations. Good morning, Mikhail. And we're going to jump into the charts here. Again, I find myself in this seat here and wondering what is going to happen today. I don't know. I mean, there's no way to really know how these markets are going to respond. A lot of folks say that markets are irrational. I think markets are rational. It's the traders. It's the people that are irrational. And we're going to see how these irrational traders treat today. I'm going to be, I think, very cautious today. Yesterday in Maycoke Money, we got short at just the right spot yesterday. If we held that all day, would have been a really nice trade. Although it was still a nice trade, but that check of that last point of control that we traded up to yesterday and fell off of, we actually, I think, hit 3 naked points of control yesterday in the S&Ps. So we cleaned up a lot of business. A lot of folks probably had some really good days and some really bad days. These big down days tend to polarize performance. I did not get hurt. I did not kill it. But I'm looking forward to seeing what the markets offer us today. Historically, really volatile periods of time are not my favorites. I find waiting for the market to give me to give me more reasonable risks and more, I think, more. I'm trying to find the word for profit targets. More reasonable profit targets, better for me. A lot of fuel with stops above us. Yes, excellent. Congratulations, Urban, first day of step 2. Just take your time. Good morning, George. Lacey's been all over the quagmire of a yard. We've got a little bit of snow here this morning. So she's a happy camper. She's just chilling right now. And not worried at all about what's going on in the markets. Bless her heart. All right, let's jump into the charts and see what we're seeing here this morning. All right, so here's the daily and the S&Ps. I wanted to show you the monthly and the weekly. Yesterday we had an outside day, and we created an outside week. And we're now, again, holding below that February low right there. There's also the possibility of a head and shoulders. And if this blue line is our neckline, we're at risk of a pretty big downside move here if we do follow what would be expected if this does end up proving to be a head and shoulders. I'm looking at pricing all the way down to 36.50, 36.40 down here somewhere. If the head and shoulders does play out, our last head and shoulders here, shoulder, head, shoulder. And this one actually played out as expected. You take the neckline to the top of the head, you extend that price range from the neckline down, and that's what you get. So if that is the case, we did it here. If we do it here, we're in for a nice leg to the downside. Again, so much of that depends on how our traders, how investors absorb the information today, Monday, Tuesday, all the way, I think, through the FOMC meeting. So we added 56,000 in open interest yesterday. That's a pretty big jump, especially considering the fact that we're in rollover and we should be moving our trading into the June contract probably on Tuesday of next week. So much for a quiet rollover for our longer time frame traders. They've been forced into becoming directional during rollover. They don't like that too much as far as I'm concerned, and from what my knowledge of them is. New York Stock Exchange had a 4.3 billion share volume yesterday. That's a pretty good jump. Good volume in futures, adding 56,000 to a downside move. This would kind of smack as being healthy. But of course, we have new information today. We seem to have new information on a daily basis. So we're going to trade what we see. What else do I have here in my little notes? So an outside day yesterday creates an outside week. The market is expanding. We're going to be looking at some volatility here. As we get closer to the FOMC, I expect some of that volatility to kind of fall off a little bit as traders get themselves positioned for the next major. We have CPI next week. Anything can happen. ACH, that's our acronym here, and we just have to look for opportunities with the information that we're seeing. Market-generated information, MGI, as Jim Dalton likes to call it, is what I'm going to be looking for my opportunities. Are we holding any overnight inventory this morning? I'm going with really no. I mean, we're higher now, but we just had this big knee jerk with the unemployment numbers. It's taken us back into range from yesterday. Last week's low is here. We've got, again, that February low back here. What exactly was that February low? I just want to remember here. That low was 39.47 half. 39.47 half. 47 half. Basically our weekly kickoff level here. When we looked higher up here, okay, when we got to this high, this was the point of control. The TPO point of control. We'll see that in the charts here shortly. Anyways, overnight inventory not really going to be a factor. I'm looking to see if I can find some fish at weekly kickoff low here. That February low is going to be very important, I think, for acceptance or rejection of higher pricing. Accepting back inside value from yesterday might lead us a little bit higher. I don't know. I'm going to be patient today. If I do anything, it's going to have to be cheap. I'm looking for cheap trades close to points of invalidation. I don't want to get roped into over trading and trying to catch every little move today. I think that's going to end up being a chop fest for anybody that tries to do that. Take a look at the TPO chart from yesterday. This is regular trading hour session only. So we traded to this point of control. This is where we got short in Make Hogue money yesterday. We did make some money on that trade, but we don't like to stick around too long in these types of situations. And if anybody saw this coming and didn't tell me yesterday, well, I thank you very much. Nobody saw this coming. This was a snowball effect as things kept coming to light through the day yesterday. Everything just pointed towards, let's just get out. Let's just kill this thing and get on with our lives. So we traded to this point of control. We traded the point of control from the previous day, and we traded all the way down to this point of control. We took out 3 points of control yesterday. Directional move. I'm calling this a trend day. The IB extreme high is the high of the regular trading hour session. That's right about where we were short. Yes, Lacey is the smartest of all of us, right? See, Urban Cowboy, that's me. I love reversion trades. I love even bell curves. It gives me just a roadmap for cheap trades and decent profit targets. I love those days. I used to call them cash register days. But once in a while, we do catch a big move like this. Again, I didn't catch it yesterday. We had great trade location by the end of the day and Make Hogue money, but we didn't hold on to that. And, so we missed a lot of this big move to the downside. Anyways, that's okay. It was a profitable day. I'm going to be happy with that. I'm going to take what the market gives me. So, overnight low, overnight high. Important levels. This trend day is pushing us lower. Again, my focus is probably going to be largely on last week's low because I think that's pretty close to where this neckline might be for this head and shoulders move to the downside. I'm hoping, here I'm using that word hoping again, that this doesn't happen. I don't want to not be able to look at my 401k. If it happens, it happens. We're not going to freak out. It's not the worst thing in the world that can happen, but I'm not looking forward to something like that occurring. This is Sam market profile, and this is volume profile. So we've got both of them here. We've got the value low for TPO here. If we reaccept in that, we may see price move a little bit higher. I mean, there's a lot of holes. There's a lot of indecision, really, in this profile by looking at these little anomalies that were left behind. Yeah, Mikkel, I'm with you, right? Let's not do that. Yeah, but this is market profile. This is volume profile, right next to each other. A point of control TPO is here, 39.9675, and our volume point of control is all the way up here, 41.1250. Let's take a look at crude oil because crude oil is getting into an interesting situation here. We've got a pretty good downside move here, like we said. It's at risk of losing 5% this week. Looking at the weekly kickoff low as somewhat resistant earlier before the number came out, it is kind of approaching the longer time frame balance low here, kind of looking at this trend line as a possible interesting area for a break to the downside or eventual support. I don't think we're going to be reaching that today. Here's the 30-minute. So we were holding below weekly kickoff, okay? We have now opened back in range and in value. Stay patient. I think that there's some fish hanging around. Settlement, weekly kickoff low or the value low from yesterday. This area here is pretty target rich. So I would be looking for opportunities here. Again, I really want to be able to limit risk. I'm looking for cheap trades. If we set up some sort of structure through the day down here, then I can use that structure to limit my risk. Devontae, if you're trading the equities, Tuesday is really switch day. I'll be letting you know on Monday and Tuesday what the volume looks like and when I'll be switching. Yeah, that's a good rule of thumb. Travis is saying you just stick whichever contract has the higher volume. I'm expecting switch day Tuesday to be really when the volume is going to move into the June contract. A little coffee. It sounds like I'm jazzed on coffee already. But I enjoy what I'm doing, even if I'm just watching. This is fascinating to me. So again, a lot of fish in this area. We had another trend day yesterday in crude oil, IB extreme high. Point of control up here, volume point of control down here. Volume was dragged lower. Volume point of control, not the TPO point of control, was our high yesterday. Trading through this to these points of control here. Again, 3 points of control yesterday. We took care of in crude oil as well as the S&Ps. The low from yesterday, important. We were just looking at that as kind of an important level. Overnight low, overnight high. Of course, if the market gets there, those will be areas that I'll look for opportunities also. Take a look at the Nasdaq. The Nasdaq is in such a different situation than the S&Ps. They're the same asset class, but they're like kids. If you have a couple of kids, they're the same asset class, but they're usually very different as far as personality is concerned. Yesterday, no open interest change in the Nasdaq. The estimated open interest change in the S&Ps is an additional 56,000. No change in the Nasdaq. It's still holding above the February low. It's not near weekly kickoff low or last week's low. The S&Ps are dealing with those right now. The Nasdaq is holding up stronger. Well, banking is one of the reasons for that, but they're just different animals. February low, the overnight low, last week's low, February low, weekly kickoff, all still below us, all looking like more support than anything else. Now the S&P is the broader index. It holds more individual stocks. Which is the one that's going to lead? Yes, banks drag the ES down 100%. But looking at the market-generated information here in the NASDAQ is holding up much, much better, of course. Here's the 30-minute chart. Overnight inventory? No, not really. We're going to be opening in the range from yesterday. It's all, to me, going to be about acceptance of range from yesterday or rejection of range from yesterday. We're already getting one nuance that says, yeah, we're going to open in range from yesterday. That's a nuance that says we may just reaccept value in range from yesterday. Another thing. What's missing? There's no head and shoulders pattern here. There was no head and shoulders pattern here either. Different. Take a look at the TPO chart. Another trend day. We did not get to the point of control up here where we did in the S&Ps. Took out this point of control. Did not get to this point of control. Much different information. Overnight low, of course, will be interesting because it is the point of control from back here on the 2nd. Overnight high, I think we have a better chance of reaching and seeing what happens there. It is also value area low from yesterday, right at that spot. So I'm going to be looking possibly for some fish around the overnight high here as we look to possibly reaccept inside of value. It's not a true value area special situation play as it's written, but it doesn't mean that it's not possible to reaccept inside value and see some upside movement. Now we've got our gold. I'm sure Rick is happy about this. Randolph. We lost 3,800 in open interest yesterday on just okay volume. The volume is a little bit unremarkable for this reversal that we saw yesterday. And again, we lost 3,800 in open interest. So this is more short covering than flight to quality, at least what we saw yesterday. It looks like we got some pretty decent volume already here this morning on an up move. Starting to form balance. Our little tennis player is in the middle here, looking to catch the volley on either side. Here's the 30. Wow, it's really snowing now. Point of control, point of control. Overnight inventory. Can we even use that today? I mean, the market whipsawed so much, it took everybody out. Any overnight weaker hands traders that were still in this market got taken out. Whether it was for profit or loss, they got taken out. So now we've got a gap higher. Gap rules. If we can't close the gap relatively early, we go in the direction of the gap. Look below. There's no unfinished business below. Look above. Points of control, point of control, point of control. There's a lot of unfinished business up here. The market is seeking visual levels. Markets are very visual. If it's going to seek visual levels, it's going to find them higher. Take a look at the TPO chart. You can really see the points of control. All right, here we go. 1, 2, 3, 4. 2 more to the upside with which to seek and destroy as far as price is concerned. Yesterday, normal variation, excess low, continuation to the upside as a potential flight to quality looms. Take a look at the euro. Euro, same thing, dollar tanking, euro moving higher, still range bound. Weekly kickoff low almost to the tick 2 days ago. Put in the low, last week's low. A lot of fish down there. Where are the fish now? Where is the fish now? Well, here's the 30. Again, it's a 730 number. A little bit of a gap. Again, we do have the naked point of control from 2 days ago when we tested down to weekly kickoff low. We also have more visuals above. We've got this market right where we want it. Is that true? I don't know. We've got it kind of closing in. Take a look at the TPO chart. Blockdobia, your TS Trader is down. This is TS Trader. This one is operating okay. I don't see that we've got any kind of wide issues. Maybe just restart it. So the euro, normal variation trading day, IB the low. Again, excess low, continuation now to the upside, another visual level above. Back up. Okay, good. Take a look at the 10-year. Flight to quality. What did we do yesterday as far as open interest is concerned? We lost 2,900. Short covering, well, it would make sense. I mean, with the structure to the downside has been good. We had to take some profits here at some point. Now we're seeing some continuation to the upside as risk-off assets are gaining more attention, right? So low to high, weekly kickoff low through weekly kickoff high. When I first wrote these notes, it was before 7:30. Things have changed a little bit. We've got potential acceptance and continuation above an important inflection level in that weekly kickoff high. That weekly kickoff high, 112.14. As long as we hold above it, it's kind of a long above, short below level. But be careful. If it becomes magnetic, then you're going to get chopped up. So be careful with that. Take a look at the 30 gap. Checked this point of control. We can't close the gap relatively early. We look to go in the direction of the gap, which would have us looking for longs. It was resistant prior to the number. The number came out. It drove higher. We're currently continuing this push to the upside. I'm not really in the market of looking for shorts for quite a while to the upside. We've got a gap that remains, a couple of points of control above that remain unchecked. Here's the TPO chart. I don't think this is gonna show those. I think it's too far back. But here's our gap, 2 points of control right here that we checked already this morning. Haven't been able to close the gap. IB low, no effort really to close the gap, and we're currently at right around the center of the range. Looking like some possible excess up here, but I'm going to be focusing on the extremes of the initial balance for anything that I'm going to do early in this session today. If I was going to be trading the 10-year. The natural gas losing 1,700 in open interest. Not new sellers, possibly old longs getting out. Are we exhausting the buyers down here? We're still in this very sticky balance area from back here. We're back in it. Take a look at the 30. Here we are. So opening in range and in value, looking like this weekly kickoff level here has become magnetic. So I'm not going to be looking for opportunities at that level. Overnight low, overnight high look like much better levels for me to be looking for opportunities because I don't like to be trading in the middle. TPO chart. Boy, is it snowing. Looks like a snow globe outside. A pretty weak low yesterday. Double distribution. This is the only market that we look at that did not leave one extreme of the initial balance at one extreme for the day session. We're in range, we're in value. Again, stay patient here. Stay patient. Better trade locations are likely to come as the day goes on. Not a big rush here to get into the nat gas. So again, if I had three wishes, one of the three wishes would for me to be able to say, this is what's going to happen today. Can't do it. Nobody can. Trade what you see. Last thing you want to do is, especially if you've had a good week, is to give it all back. Manage your risk, trade by trade, day by day, week by week. If you've had a good week, try and make a little dough today. If it doesn't work out, don't bury your account. There's no reason to get all beat up on a Friday like today. Anything can happen. I'm going to take my deep breath. Remind myself to stay humble, grateful, creative, and centered in my trading today. If I get in a hole and I start to feel emotional or angry, I know that it's going to take me out of my strategy, out of my process. And if that happens, then I know I'm in trouble. The worst thing that can happen in that case is for me to have put on a trade and out of anger and have it successfully profitable. Because then the next time I get angry, the next 900 times I get angry and I put on a trade, it's not going to go that way. So manage yourselves, manage your trades, manage your risk, manage your week, manage your month. Get out unscathed today. Get some rest this weekend. Be kind to yourselves. Be kind to others. I want everybody to do something very nice for themselves. I don't care if it's just a walk in the woods. Do something nice for yourself. We deserve it. We work hard at this. We work hard at this. The real reward for doing this is money, but there's others things. There's other things too. Just be good to yourself and, of course, be good to each other. Say a prayer for peace, please. Have a great trading day, a wonderful weekend, and I will see you 7:45 Monday morning for the market prep. Get out there and profit today.